Hello everyone, welcome back to my channel. Today we are going to look at the real estate data in Phoenix, Arizona and answer the most important question right now. When will the interest rate, the mortgage interest rate goes down? Now the reason why I try to answer this question is that because we can look at some of the information which proves that the interest rate goes up, changing everything, right? We already see that, but today we are going to show you, I'm going to show you one more time how the interest rate goes higher, change the market crazily. And for that reason, a lot of people are waiting for the interest rate to go down and to jump into the market, to jump into the buying process, right? So let's take a look at that, and we can see how we can answer the question. All right. Now but first though, let's go through a couple of the real estate market update. Now this one is specifically for the entire month of November 2022. This is a collective of all the real estate data, all the data for the month of November of 2022. Next month is going to be extremely important because we are not only looking at just December, but also looking at the entire year of 2022 as well, so that we can see what we can do for 2023. So take a look at make sure that you come back. If you cannot come weekly, make sure you come back for the next month's episode, because we are going to look at the entire year of 2022. But let's first look at the real estate data in November 2022, right? So this is the monthly sales. This is the number of homes sold for the entire month of November 2022. We have the number of 4,756 homes that are sold for the month of November. That is definitely a reduce of about 44% compared to the same months of 2021, right? You remember, if last year, a lot of people are still buying a home, and as you see here, it's almost a constant line. Because of seasonal trend, right? It's reduced a little bit, but it's still 8,500 homes sold for the month of November versus now only 47. Right, so it's not only the seasonal adjusted number of sales, but also the interest rate that has changed a lot as well. And we're gonna look at that more detail later as well. In terms of month over month, it is another 10% reduction compared to October 2022. Now, while the number of sales scare a lot of people, because hey, there's just not a lot of buyers on the market in nowadays market, right? In the opposite though, for the seller, there's actually less and less sellers that are motivated to sell in today's market as well. Specifically, for the entire month of November 22, we only have about 5,903 new listings. So this is the listing that the seller, the homeowners, put onto the market for the entire month of November. And there's only 5,903, which is a reduction of 25% compared to the previous year, November of 2021. And it's actually 22% decrease when you compare to the previous months of the same year, October 2022. So in contradictory with 2008, there's no chart of 2008 and 2009 here, where the number of new inventory goes up every single month. We have the situation of the opposite, versus like in April and May it still goes up, but then after that, June, July, August, September, October, and November, keep going down. It keep going down, and we can see that the trend gonna be continue going down. Because think about it, right? The seller has no motivation to sell, even though there's not a lot of buyers on the market right now. Is number one reason, like, why do we have to sell? Why do they have to sell? Because there's just nobody buying houses right now. And they have so much equity in their home that they don't want to give up. They have so low interest rate right now that they can easily afford in this market, right? But when I say low interest rate, remember, those are the homeowners that own the house, that bought the house or refinanced the house a year or two ago when the interest rate were very low, right? So there's no motivation for them to sell the house. and sell the house and then go rent or buy another house, which gonna give them a worse situation than keeping the current house, right? So that is the reason why right now the new inventory is very important, because if you look at the total inventory, because it is one of the factor that impact the total inventory, right? The total inventory is the number of new inventory coming onto the market, and the remaining from previous months, right? Obviously, you see here from April, May, June, July, we have a high increase of total inventory. August, September, October, we have a little bit increase of total inventory, but now we actually reduce. So So that means the supply on the market actually drop. Now, when the demand drop, the supply increase, we have a price high, right? Price increase. But when the demand drop and the supply also drop, there's not much pressure on the price to be reduced. So therefore, we don't see a lot of home reductions in our market anymore. You still see them on the market, but not as many as before. So in terms of the total inventory, we have about 21,067 homes every day on for the entire month of November. Now, this number is actually less because we are in December already. And when I see that, right now, when I check the market, it's actually only 18,000 active homes, about 18,000 active homes on the market as of right now. So the number is actually reducing. So therefore, we don't have a lot of pressure in terms of price to be reduced. Because basically the number of the buyers on the market and the number of homes on the market are pretty much the same, which we are officially in the stabilized market, right? This number is actually, yes, when you compare to the previous year, is an increase of 92%, right? But this is still a historical low compared to long-term gain, right? This is when you only compare to previous months, year. Now, when you compare to previous months, it is 7.7% down compared to October of 2022. In terms of the speed, how fast the homes on the market get sold, the total number of the monthly supply of inventory is now 4.43. That means 4 months and 20 days, about 20 days that needed to be to get the home sold on today's market, right? Now, this number is actually worse because when you compare to October, it's actually only 4.30. Okay, 4 months and 15 days. Now this is 4.43, 4 months and 20 days. Now this is the number that apply for the entire Phoenix market. Depend on the city as well. Some of the cities, for example, Chandler, gonna take much faster to sold compared to, for example, Buckeye or Casa Grande or Maricopa, right? They can need more time. So this number is an average for the entire Phoenix market area. Okay, this number is basically mean that if there's nothing new on the market coming onto the market, it's gonna take about 4 months and 20 days to get everything else sold. Now, you might ask, okay, if it is keep increasing like this, do we have a problem? The short answer is not yet. The long answer is, on average, the historical average is about 6 months. Okay, so if like in a balanced market, right, it's gonna take 6 months on average for a home to be sold. In today's market, it's only 4.43. So even though we are higher than previous month or higher than previous year, right, we're still at the lower level compared to the long-term historical number, right? So we still be okay. As long as it's a 6, then we're gonna have more of a buyer's market. Right now, we still we're not approaching the 6 or the 7 yet. All right. The next information is the average days on markets, right? This is the number of days before a home get this is needed to be sold. Okay, 61 days. 61 days on market. This is increase of 6 days compared to previous month and 27 days compared to the previous year. right? That is obvious because last year people buying go crazy, right? There's 8,000 people bought a home during the month of November versus now only 4,500, right? So there's a lot of reduction in terms of the demand on the market, and therefore it takes more time to get a home sold on today's market. Now, the next set of numbers, I think this is the most fascinating numbers of this slide right here, because we're talking about the prices, right? How did the sale price change compared to the previous months, right? The median list price is now 439,000. All right, this is still an increase of 2.1% compared to the previous year. Now, this is only the list price, right? This is only the asking price from the seller, meaning that, remember about the slide that I say the seller is no longer motivated to sell the house, right? If for some reason they have to sell the house, they still believe in the value of the home, and therefore it's still 2.1% higher than previous year. Now the actual sale price is 420, so which is about $19,000 less than the asking, right? Because of the negotiation during the initial offer, inspection, appraisal, and things like that, right? The immediate sale price is 420. Now that is a reduction of 0.9%, right? 0.9% compared to the previous year. Now from now on, we're gonna see every single comparison of a negative number, because we already see like zero is pretty much the same, right? And if you see the long trend, the median sale price is gonna keep going down. You keep going down unless there is a change in the market, right? Right now, there's nothing changed. The interest rate gonna be around 6 or 7 for the rest of the 20 for the close time, right? There's no signal for it to be changed dramatically, similar to May or June situation, right? The number of buyers therefore going to be the same. The number of sellers therefore going to be also the same. So everything is the same. So we can see that the trend of the sale price is going to keep going down. Okay. So for that reason, we forecast that the next report, in the next report, we're going to see December of 2022, it's going to have the median sale price about 420 as well. There's no change. Now remember, if you remember, the forecast of the previous month when I do this is 418. So it's actually, the sale price is actually a little bit higher than our forecast, right? So hopefully it's going to be the same situation. Instead of 420, we're going to see a little bit higher. In that case, it's going to be a surprise to me as well, because it's actually higher than the month of November. So let's wait and see what's going on, and we can find out more information after that. All right. So the next part. Now, first of all, thank you so much for watching the monthly report. The next part is to help you understanding the current situation, the change of the situation. The interest rate goes high, right? When the interest rate goes high, right around April, right before April, as you see right now, this chart, first of all, sorry about that. This chart is, first of all, the orange is the median sale price minus the concession. All right. So the reason why we say a concession is because in nowadays market, on average, the seller has to give up about $10,000-$15,000 for the buyers as a seller concession paid toward the closing costs or reduction of the purchase price, right? To be able to get the buyers. Right? Now, that's the reason why we're talking about concession right here. The median close price is the blue right here, and then the orange is the sold price as well, but it's minus concession, because the concession is basically the loss to the seller, right? So the net to the seller is going to be actually lower if we account for the concession. As you see here, 2021, 2020, the first half of 2022, the two line is pretty much one line, right? The two line is pretty much one line, because during that period, the seller doesn't have to give up anything, additionally to the buyers. In fact, the buyers have to pay even higher. And see, in some situation, the buyers have to give the seller some concession, some closing cost support for them to be able to get the house as well, right? Now, April, when the interest rates goes higher, we can see that there's a separation right away between the orange and the blue line, meaning that the seller react to that situation and they are willing to give up. Now, the number one recognition is that the two lines are starting separated, right? Now, until now, about as of right now, December 2022, the separation is about 9,000, right? So that is the average number of the seller concession the seller has to give up to be able to get the home sold. The second notice that you can see is that the downtrend of both lines, meaning that the home price sold less and less and less compared to the previous month, right? So that is the impact of the interest rate, which is the main reason why a lot of people are asking, when will the interest rate goes down, so that it's going to keep going, the market going to go higher, the home value going to go higher, right? We are going to look at the number one. This is very important because the interest rate, the mortgage interest rate specifically, follow the 10-year treasury rate very closely. As you see here, there's a peak here. Well, there's a peak here. The green line is the treasury rate, and the blue line is the Freddie rate. This is a mortgage interest rate from Freddie, right? See here, there's a peak here, and there's also the peak here in the mortgage. There's a peak here, and there's also a peak here. There's a peak here, 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 and there's a peak here. The reason why I mentioned about the peak is that it's easier to see, right? You can see that anytime that the treasury rate has a peak, I have to say that right, I have a peak, you can see right away the Freddie rate gonna has a peak also. As you see that the treasury rate, even though it's still on the trend of going down, right? It's on trend of going down. And therefore the mortgage rate is also on a trend of going down. It's already reached the peak, right? It's already reached the peak. So we can see that toward 2023, there's more chance that it's going to keep going down. Now, I'm not saying that it's going to go like way down below 5, right? That's less likely, because as you see here, for example, in this period right here, right? Even though it's go down a little bit, then it's go up, and then it's go down a little bit, and then it all go all the way up. So it can be very well in a situation that it goes down here and then it go up again, right? And it go up. So who knows the future, right? Nobody knows the future, and nobody, I cannot predict 100% of the future. We only look at data and see what's going on. According to the data, we can follow the treasury rate, the 10-year treasury rate, and then we can find out the response of the interest rate, okay, mortgage interest rate. Now, that is my recommendation. The second thing is that if we look at the difference between Freddie rate and treasury rate, right, the red line is different between them. As you see here, there's a gap, right? The gap is the difference. Right. In some situation, we see that there's a bigger gap than other situation. Why do I say that? Right here, on average, right, the change is about 1.72. The difference is about 1.72. And sometimes it go really high, therefore it is forced to go down lower, and then constant again, and then go higher. Right. Right now, the reason why I want to point it out is that right now the difference is about 3. Is about 3. So if we say that the difference has to be about the same, right? So then we most likely is going to be reduced. Most likely it's going to be go down, but who knows for when, right? Most likely it goes down, but it could take a couple months, couple years, who knows? What we can know is that we can follow the trade, the chart, the treasury rate, and we can see the lower the treasury rate reduce, the lower the mortgage rate gonna be. So And then I can see that the mortgage rate is actually going to reduce faster so that it can meeting the average of 1.72, because right now it's about 3, right? 3%, right? So it to be able to be around 1.72, it has to reduce a little bit more than the treasury rates. So this is a good news, and also this is a good news for the consumer, that we can see the future, the interest rate gonna be reduced. However, though, the question about when is very difficult to answer without a clear without following closely to the data, right? So that is one of my tasks that I always do on Monday, and I'm going to report to you immediately when we see the signal that the interest rate goes down. According to right now, so just want to give you the behind the scene on how we can come to that conclusion. As of right now, we have a lot of signal, a lot of indication that the interest rate gonna goes down. When we're gonna find out, and then whenever the treasury rate reduce, right, we're gonna see immediately the interest. Not immediately. We are able to see the mortgage rate reduce as well. All right. Thank you, everyone, for watching the video, the mortgage update, and I'm excited to talk to you more about any question about the market as well as the real estate in general. Please let me know if you have any question. My phone number is 602-515-2442. Thank you. Bye-bye.